So we'll just wait for a minute and we'll have the CEO panel discussion next. So we'll just check, just give us a minute or two. Discussion of the 20th Annual Banking Technology Conference. As India moves towards becoming a developed nation, the banking sector must evolve to meet the demands of a dynamic, digitally driven economy. Today, we have an exceptional lineup of CEOs who will share their vision on how banks can innovate, adapt, and scale to support financial inclusion, technological advancement, and sustainable growth. Their insights will shed light on the strategies needed to create a robust and forward-thinking banking ecosystem for a prosperous and self-reliant India. Let's dive in. The topic for the CEO panel discussion is Building a Future-Ready Bank for Viksit Bharat. Ladies and gentlemen, I feel extremely honored to invite on stage the panel of speakers for this session. Shri M.V. Rao, Chairman IBA and MD and CEO, Central Bank of India. Can we have a huge round of applause for our panelists, please? Shri Devdutt Chand, MD and CEO, Bank of Baroda. Shri R. Subramanya Kumar, MD and CEO, RBL Bank. Shri Ashok Chandra, MD and CEO, Punjab National Bank. And our moderator for this session, Mr. Piyush Dalmia, Senior Partner, McKinsey & Company. Over to you, sir.
Super. Hopefully I'm audible. First of all, thank you. Thanks to Mr. Rao, Mr. Chand, Mr. Kumar, Mr. Chandra for taking the time. The topic has been laid out is future-ready banking for Viksit Bharat. The Honorable Prime Minister has clearly set the direction for us. He set the North Star for us in terms of Viksit Bharat and laid out the timelines for that as well. And all of us are well aware that the banking industry and financial services has to play a critical role. On an average, the banking industry grows at about 1.8 to 2 times of GDP. And that's something which we need to continue if we have to get to the aspiration of Viksit Bharat. I think in that context, Mr. Chand, if I can start with you, as you look for the new set of demands, the new set of opportunities that emerge as India sort of moves towards Viksit Bharat, what are the opportunities that you see for the banking sector? And what are the challenges that you also see for the sector as it helps and enables the country to move towards Viksit Bharat?
Yeah, thanks, Piyush. It's something very fundamental now with regard to India as a developed country by 2047. And if you look at to grow as a developed nation or to a kind of the concept of the Viksit Bharat, what is important that the country has to grow on a nominal GDP scale almost 11 to 12% consistently for many years now. And looking at a nominal GDP growth of 11 to 12% for many years now, the banking sector, the credit growth has to be almost at the level of 14 to 15%. So when I see a scenario wherein banking sector, the credit growth has to be 14 to 15%, then I think banks have a big role to play to make India as a Viksit Bharat by 2047. And there lies the opportunity for the bank. There is a responsibility here and there is an opportunity here. The responsibility is to support the kind of credit growth that we need to think of 14 to 15%. All the banks need to be adequately capitalized. So as on today, all the banks are adequately capitalized, but looking at a capital requirement to support a credit demand of 14 to 15%, I think a couple of things which are important for the banking sector. One is that we need to have a very strong financial system. And on the strong financial system, it is not only the loan market we are talking about, we need to have a robust capital market, which is currently so. But only one aspect, what I would think that slightly we need to do more is on the debt market. So there again, because banking sector may not be the only sector to support to the country's requirement, so I think we need to slightly work more on the debt market side. But looking at the current scenario, whether there is an ability of banks to support 14 to 15%, that's absolutely the so. The second aspect, which is again important and in the current context of the today's discussion, is that technology something is the driver in terms of creating banks to meet to the concept of Viksit Bharat. I think there is a great requirement of technology-led banking to support to the requirement of Viksit Bharat, because that kind of technology evolution happening. Banks need to invest heavily into both the capex and opex in terms of the technology-led banking, so that we increase the efficiency, productivity, and also with regard to the way we want to reach to the customer, so that we can support a growth of 14 to 15% credit. That's something very important. So I think there are two ways. The opportunity is a credit requirement which the banks going to meet, and the challenges in terms of the technology, which again the banks need to change themselves to meet to the technology challenges.
Mr. John, I think very well put. The opportunity is in growth. The question is, how do we tap into that growth, leveraging technology in particular? Mr. Chandra, if I can bring you into the same question as well. We spoke about growth, we spoke about technology, either sort of just furthering that point or additional elements in terms of challenges and opportunities.
Yeah, good evening to everybody here. First of all, I thank the IBA for giving me this opportunity to participate in this wonderful session. Viksit Bharat 2047 is not a dream, it is going to happen. But before I move forward for the opportunities and the challenges, let us see where we are now and where we are going to be by 2047. I think today we are the 5th largest economy in the world, and having a $3.94 trillion the GDP. I think in a span of another 2 years, definitely we are going to be the 3rd largest, beating Germany and Japan. Now from this $3.94 trillion, we need to reach the level of $30 trillion by 2047. Now, how we are going to achieve that figure? I think with the speed of around 6.5 to 7% average GDP growth, definitely that figure we are going to achieve. Now, once we are aiming for that figure, what are the key things that is there in the store now? First thing which we should see, and as a banker, I feel that that is opportunity, and as a challenge also, that today we are at, if I take that credit to GDP ratio where we are now, around 55% credit to GDP ratio is there. And today, if I see the developed countries in the world, USA, Japan, China, they are at 175, 195% of the GDP now. Now, if we are aiming for 30 trillion of the GDP, then definitely at least 100% of the GDP in the credit portfolio, we should aim for that, and we should reach that position. Now, if we are aiming for that 100% of the credit to GDP ratio, then as a banker and all the financial institution, all of us, we are gathered here, we can assume that how much opportunity the system is going to have now. Similarly, another one data point, which is the World Bank has also flagged that is the bank assets to GDP, because these are all linked with the opportunities which are going to be there in the system. Now, the bank assets to GDP, as of now, the India is having around 72 to 75%. Now, the developed countries, if we are talking about it, now it is all 120 to 130% bank assets to GDP. So these are the credit to GDP and the bank assets to GDP. These are the two things which are going to provide ample opportunities in the system for the banks to grow now. Now, if we are aiming to grow at that speed, what are the opportunities that is there in the system now? One is that capital infrastructure. We are seeing that how much infrastructure facilities are getting developed and going to be now. We talk about the roads, airports, ports, I think railways. You see the ample opportunities are going to be created, and that is the area a lot of developmental activities are going to happen in this span of time now. Another sector, and I think very, very interesting, and a lot of things are happening in that particular piece, is the defense, aerospace, the AI, data analytics. You see how much thrust is there on the semiconductor. I think these are the areas we never thought of, but going forward, if India is aiming for this developed nation by 2047, I think these are the opportunities that is going to be there. And as a bank, I think these are the areas we were not having the expertise. So going forward, as a banker, I think we need to develop the expertise in this particular area, because this is going to be the fastest developmental activity. These are the areas which are going to generate the export income for the country now. Now, the second piece is the financial inclusion. Now, we have 65% population is staying in the rural areas now. But I was seeing the data, the total credit which is there in the country is only 18% is flowing to the rural areas now. So now that is the opportunity, and that is the strength for the banking fraternity I am seeing now. You see, we have around 80 million the SHGs now. If I convert it, that every SHGs will have around 10 to 15 members in that particular society, I think there are around 20 crore people whom we can cater and whom we can bring it and integrate in the banking system, and we can finance individually to those SHG members. That is not there, and that is the opportunity I am seeing as a banker now. We have more than 7 crore MSME units in the country. And if I take that, Uddami portal registration itself, we have 5 crore Uddami portal registered units are there. But what is the banking, the credit flow it is happening now in the MSME segment? Informal credit system, 90% of the MSME units funding is being done by the informal sector now. So that is one opportunity, and if the country has to go to $30 trillion US, the economy, I think that is the opportunity that is going to be the financial penetration. Yes, we have opened 54 crore Jan Dhan account, but whether those Jan Dhan accounts are, still it is only on the, they are catering only the deposit side. If we are able to penetrate through the credit route to this Jan Dhan account, to those SHG members, to those MSME clients, I think there will be an ample opportunity for the country to develop, and that is the roadmap which we need to create to reach to that 2047 developed country as a whole. Now, the last piece which I will again, the touch point is that, yes, we are talking about the credit route, we are talking about the penetration, but how it is going to happen? It has to happen through the digital route now. I think without digital intervention, without the advanced data analytics and the generative AI, I think we are not able to catch this roadmap now. So if the country is having 154 billion of digital transaction, and I was seeing one data which is really very interesting, that 46% of the digital transaction in the world is happening in India now. So if we are imagining with this almost $4 trillion economy, if 154 billion transactions are happening through the digital route, if we are aiming for $30 trillion economy, you can imagine that $154 billion transaction or 154 billion transaction in a month is going to happen now. So then how robust we are going to build up our technology now? How robust our cyber security is there? So I think these are the challenges which is there before the country now, and that is before the bankers. And I see that is the opportunity for the banker that, yes, we need to develop our the system, we need to develop our procedures, and definitely, I think we are collectively, we are aiming for that position now. So thank you.
I think very, very well put, Mr. Chandra. I think you spoke about scale, and as credit growth happens at 12–14%, every bank will add another bank in about 5 years' time. So you're literally sort of doubling your size every 4 to 5 years. And with that, I think the penetration and the inclusivity also has to come. Mr. Rao, if I can sort of bring you into the conversation, as you think about the scale and the inclusiveness, likely this will not come, the 2x will not come with 2x branches. It will not come with 2x number of people. It has to sort of come in a significantly different way. What's the role of technology in your view as banks look forward?
Yeah, thank you, Piyush. And I think first I would like to thank all the participants, because I'm seeing all serious faces. Since morning they are all bombarded with so many themes, and just I would like to ask throw a question to our participants. How many of you are really interested to see the outcome of the efforts today we are putting in, for which you may witness or may not witness? Very good. Yeah, that is the confidence, you know. That's why in 2047, I do not know how many of us will be on this planet or not. But the groundwork which we are all committed to do, and then see that our nation develops into a developed category. The pertinent question what you are asking about the inclusion and also the models which may undergo. Yes, these models will undergo a sea change. Now itself, all of us as bankers, you are experiencing how our household savings are moving into the investor category, and the markets which has to cater to the capital of the banks, because the way our ambition to reach the 30 trillion economy, our capital requirement for banks is the 4 trillion. In that, 1/3 should be the fresh capital. To bring this kind of capital resources, what is that is required when your resources, so till now we are depending on certain resources which are moving into the market, and how you are deepening the markets, how you are bringing the new structures, and then how the changes in the regulatory environment that is going to assist you to reach our objective. That is the broader imperatives that we have to find a solution. But definitely, once we are target oriented and we know our objective where we have to reach, definitely that new instruments and then new regulatory environments for enabling the growth will come. As far as this inclusion part, it is only the primary step what our country has achieved. As such, if you see that even if you become a third largest economy in the next 2 or 3 years, if you see the per capita income that is less than what 20th or 21st in the grading of this GDP. So here inclusion is totally focused on improving the standard of life and also improving the per capita income. I think the models what we are adopting right now is not the panacea. It is the starting point, and definitely technology will enable us to reach our targets. Yeah.
Thank you, Mr. Rao. Mr. Kumar, if I can, RBL as an institution has always been at the forefront of innovation in technology. If I can request you to maybe take 1 or 2 examples that you've seen maybe over the last 12, 18, 24 months that have surprised you from a technology perspective, and you think in many ways lays the foundation for what to come.
Thanks, Piyush. Good evening, all of you. Quite challenging to be a banker in the private sector when you are there on the other side of the coin, where one of the biggest challenge of mobilizing the deposit to fund your advances, mobilizing the capital to manage the growth. All the things are taken care elsewhere on the boardroom, in the other side when I was planning it. This side is going to be a challenge. How do you convert this challenge into the opportunity? The biggest question which is being debated in all these private sector boardrooms. The first and foremost challenge what is required is, do we have enough ability to generate internal accruals to substantiate our investments and substitute the dependency on the external with the opportunity for growth? This is a big conflicting one. Do we have an answer straight one? No. But when we entered the market as the 20th player in almost all the products which I introduced in a couple of years, 20th or 30th or 40th, they were advanced ones. So you have to differentiate. The differentiation has to come from 2. 1, your product features, the product features richness. Today, you can't find a differentiation of the product. Housing loan is housing loan, whether it is given by A bank, B bank, or Z bank. What is the differentiation? Is the delivery. The last mile delivery, and if the delivery is a packaged, then that is the only one differentiation we do. You get the same stuff in the nearby Kirana Dukan, still we prefer to go to the e-commerce. Now many of us have moved to the quick commerce. It is not because the product is going to be different, because we are seeing that the style of delivery and the packaging of the delivery, the timeliness of the delivery. So these are the factors which differentiated, which we consumed. And in fact, the last 2 years, I can just give an example of what we have done in respect of the rural vehicle finance, which we call as the tractor finance is called rural vehicle finance. Why we chose that? We saw that there is a big opportunity for us to make a differentiated delivery. The 20th player, when I just started in 2.5 years before, great struggle to even reach 300 crores of business there. The model was simple. How do I make it 10 times? That means I should be able to develop a book of 3,000 crores. The time available is not 30 months, it should be 24 months. So you have to put a challenge to yourself. The differentiator came in the form of a technology. Everybody followed technology. We followed something called a phygital. That's if borrower has to be necessarily seen by you, not your longitude and latitude alone will not enable you to meet the borrower. Somebody in the system must meet the borrower. So we always follow something called phygital. Physically meeting at least one and digitally handling the entire process. What I made my team is that walk into the showroom of a tractor dealer, ask for a business. He said, big no. What is this RBL bank? We never heard of you. Right? Maybe you were known in some of these metro circles. Then he said, we started looking at what is the pain point of that particular dealer. Pain point is simple. Sir, 50, 30 people are coming into my showroom to look at the tractor. End of the day, 5 of them converted into that purchaser of my dealership. So that's a point number 1. The second pain point is, I take the dealership, go to the nearby bank, convince him about my dealership and the borrower, KYC, everything takes place, and I get my money, converting my tractor into the real rupee after 1 week or 2 weeks. That's pain point number 2. The first what we did, let us address these 2 pain points. Adapted simple digital from end to end. You have a lot of LOS systems available in the system, but we tweak the LOS in such a way that, do I have a solution to tell that particular prospective borrower of ours, the prospective buyer of the tractor, to convert the deal before he leaves the showroom? He walks into the showroom, the average time a farmer takes to choose a tractor in a showroom is 4 to 6 hours. Can I provide a solution which provide him an opportunity to say, yes, you are eligible, you are not eligible? That is going to bring a cheers in the face of the dealer, because dealer says that, yes, see, you chose this tractor, here is the opportunity for you to get the loan. Point number 1 is fixed. The second point was that once the deal is done, do I get the money back into my account within just 24 hours? Why should I pay interest in respect to the working capital which I'm going to raise it? Point number 2, which was done, the back end was integrated with my front end seamlessly, and we were able to provide that sanction. The moment the tractor reaches the home of the borrower or the tractor person, this person's account is created. Point number 2 is solved. Today we saw the phenomenal growth of 10 times the book. Exactly 2.5 years before we had 300 crores of book, now we have 3,000 crores. See, I'm not telling you that this is going to be the edge and the end of it. You can't relax back. That's what the market dynamics is. Catching up at technology is simple as 6 months time lag. What you have done today, somebody will do it in 6 months time. You can't be daydreaming saying that, yeah, I have done something, it is my pattern right. Nothing is patterned in technology. Only thing with a little tweaking, somebody is going to come with the innovation above you. So you have to think about the next step. We are already working on the next step. How do we continue with our dream of capturing the business? This is exactly what we did in respect of all the products which we introduced 6-7 times. And another very, very important thing where retaining the customer is the toughest task. See, we are not as big as like my colleague sitting on the floor, no? The cumulatively, as somebody was telling it, somebody will be growing, all 3 of them put together will grow my balance sheet in every quarter or so, right? So the challenge for me is that which segment of the customer I am going to target, which segment of the customer I am going to retain, which segment of the customer I am going to do the fulfillment to his satisfaction. So the demand today can be met only by technology. Simple example is we adapted AI in our call center. Why we chose call center was, you get a lot of calls, we don't have a branch, but my total customer base is 18 million. 5 million customers are holding a card, they can't walk into the branches, they have 500 branches. So they have to come to the call center only. Do I have an ability or achieve an ability which will enable the person to get his call resolved the first call itself, which is a very difficult task to do it, but AI stepped in. When we just did an analysis ourselves, we found the guy has to make at least 2 or 3 calls. You always know it. Now, when the call is there will be a rukavat ke liye. There will be a disruption of the service provider, a disruption of the server at the back end, disruption of your CRM, whatever could happen. What we did was we introduced AI. The first thing is, the person calls up, it is one call for him, it is 100% success, 100% failure. So important for him, whereas the call recipient, it is 1 out of 100 calls. He divides 1 by 100 time of the time. For him, it is another one call. Oh, okay, sir, out of 100 calls, 20 calls were missed. Okay. For him, it is not a big. 20% error is something which is acceptable in our mind, in our frame of mind. All of us sitting here will accept just 20% only. No, forget it. So what we did, we simply adapted AI there. First, what AI did is converted the speech into the text. This resolved the biggest problem in the call center of not understanding the requirement of the customer client and resolving it. We went into it, we found out the customer will be asking about whether my credit card bill has been satisfactorily credited to my account or not. This will be just blabbering about credit card features, everything. There is a disconnect. AI told him, just it will flash in his screen. What are all the questions he's asking for? What is his mood? Is he angry? Is he in a normal listening mode? Is he going to make you to be more irritated? And it will also tell how you are responding. Are you irritating the customer? Are you going to get into the conflict zone? So it is just enabled the call center agent to understand the requirement in flash. So it just brought down the repeat calls by 50%. Yeah, now we are working on the second phase of the AI. What it is going to do is that it is going to get connected to all these surround systems and pull out the data, what is required, flash it on the screen. The ultimate aim of the bank, my dream is, if a person calls once, it's resolved satisfactorily on that one call of 30 seconds, 45 seconds, 50 seconds. That is exactly where I'm 100% sure the technology will step up, and we have seen a lot of positive vibes in that. And going forward, it's a challenge to keep pacing with that. No? Because the biggest challenge is that the only constant thing is change. And another biggest challenge is you have to be on a treadmill continuously. You have to be on the same pace, you have to run it. The speed is only increasing it. So you must have a very, very successful heart, for which the team is the important thing. Ultimately, it is not the AI which is going to replace. The heart is a function, the heart is my team. The RBL employees must have a feeling of, yes, buck stops on my table. That is exactly where we are working on. The combination alone will work. One doesn't precede another, one cannot succeed other.
I think very, very powerful notions, Mr. Kumar. I think the combination is what's important and not anything in silo by itself. Love the notion of phygital and how banks are now sort of moving beyond financing to solving real problems, I think, for their customers and their intermediaries as well. Mr. Chand, if I can, I think Mr. Kumar spoke about technology. He did talk about AI as well. If I can just double click a bit more on the AI topic, because we cannot have a CEO conversation without a conversation on AI anymore. Any examples from your institution where you've successfully applied AI and seen significant value?
Yeah, that's a fair question for Bank of Baroda particularly. The reason being, if you talk about technology for last many decades, the process part of the banking has been completely digitalized as on today. So the aspect we are focusing now, as Mr. Kumar said, is with regard to can I use AI for two purposes now. One is to have a decision support system, and another is the customer experience. So AI has been used as a decision support system for many years now. As a bank, we are using AI in multiple verticals, whether it is risk management, fraud risk management, decision making, underwriting, everywhere. The aspect where possibly we have done a good part of the work is with regard to the customer experience now. So there are three, I will say, products or use cases for Bank of Baroda, wherein AI is extensively used and giving very right dividend as on today. The first one is a Gen AI product called Aditi. It's a virtual relationship manager interacting with the customer on a live basis. There is a chatbot called Adi. And the third is a Gyan that's some kind of a information portal for my own internal customer to understand the product and services better. And all these three products are based on the AI or Gen AI. Aditi has been a great churn in the market in terms of the product, because this is one product where Gartner, when they studied the innovation in the Gen AI space across the globe, they took the Aditi product of Bank of Baroda is one of the examples wherein the top 5 in terms of the innovation that happened on the Gen AI space for banking. Recently, when Mr. Satya Nadella came to India, he gave a presentation to the Indian CEOs at Bangalore, and he talked about all the 3 products of Bank of Baroda. So there, the Gen AI and the AI is playing big role as far as we are concerned. We are getting right dividend. And the purpose of all these 3 products is to improve the customer experience. Aditi is a direct interface with the customer. Adi is also a direct interface with the customer. The Gyan Sahaya, which I am talking about, is an internal portal where any of the frontline staff of Bank of Baroda, a customer is asking about some product. Earlier, there used to be a lot of complaints saying that whenever we are interacting with a branch person, he is unable to define the product fully or tell the service requirement. So the employee can directly touch base in the Gyan Sahaya portal and get the information and immediately convey to the customer. So I think these are the 3 use cases working big time for us, and the hits are significant. As on today, we are improving this system on a day-to-day basis based on the experiences. And I think that's the way forward to improve the customer experience. We need to have the AI and Gen AI extensively using in the banking so that we reduce the time it takes to reach out to the customer and improve the experience there.
Oh, it's fascinating. I think to be a top 5 Gen AI innovation coming out of Indian banking by Gartner is clearly an achievement. So many congratulations on that to you and to Bank of Baroda. Mr. Rao, if I can move to a slightly different facet of the conversation. As we deploy technology, as we deploy a lot of AI, banking is also one of the most regulated industry. We do need to acknowledge the role of the regulator, and we have to work within those boundary conditions. So as you think about the evolution of technology, are there specific areas where you think the regulator can sort of step in more and unlock opportunities for the banking sector, things that are working well, things potentially where we can do more from a regulatory perspective?
Yeah. See, nowadays, if you see the worldwide, even in our country, there is a lot of regulatory changes that are coming up. Whatever the regulatory landscape which is undergoing the change is also bringing certain kind of boundaries within which one has to operate. So being the regulated entity and then answerable to the depositors and protecting the trust factor and also maintaining the stability in the economy, one should act and also innovate whatever that is there within the boundaries created by the regulator. But another aspect is also there. When we constantly engage with the regulator, we also say that these are all the things that are happening, where these boundaries are to be a little bit stretched. That flexibility also we have seen from the regulator's part. So, for this Viksit Bharat objective, whatever the challenges that we are facing, it is not that this is the iron boundaries that are made. These boundaries can also be a little bit stretched. This is possible only with the constant engagement with all the stakeholders, including the regulators. See, whatever that banks do, just you can, I can compare with the symphony. See, a lot of players will be there in the orchestra. To create a music, all the players should play together. No solo can create a soulful music. So this is how the things are happening, and we are pretty confident wherever that hurdles are we are encountering, and we are very healthy platforms to discuss with the regulator and also to get certain leeway.
No, Mr. Rao, I think, thank you. I think I'll take this analogy back with me in terms of the orchestra and the different stakeholders, including the regulator being part of the orchestra as well. Mr. Chandra, if I can bring you back into the conversation, we spoke about scale, we spoke about technology, we spoke about AI, we spoke about the regulator as a stakeholder. The other important stakeholder is your own employees. I think the bank can invest significantly in technology, significantly in AI, but unless and until there is adoption by your own employees, it's incredibly difficult to ensure that the customers adopt as well, and the bank sees value in that context. And some of these changes are just so rapid that it's not easy to manage that cultural change. I think particularly, you've been in public sector institutions for a long time. They have their own specific challenges and notions as well. How do you manage this cultural shift? 20 years back, it was core banking. Now it's something else. How are you managing this transition from a cultural and a people perspective?
Very right. I think 20 years back, if somebody would ask the tech-savvy bank, it means the bank who has done the core banking solution and installed hundreds of ATM. That bank, we used to tell that this is a very tech-savvy bank. Today, after 20 years, the scenario is totally changed now. Now we are talking about the AI, Gen AI, what sort of data analytics center you have now. So the environment is totally changed. So in this context, see, when we are talking about the Viksit Bharat and 30 trillion business, now all those things have to happen through our staff members only. You are very right. Unless and until we take care of the staff members and on a continuous basis, we go for upskilling and reskilling of the staffs. Building the capacity building is another one very important aspect, and that too for the public sector bank. Unless and until we put focus on those areas, it becomes very, very difficult to reach that milestone figure now. So now I will just share the example which we had done it in my previous bank by using that AR and VR, automatic the reality and virtual reality. We created a avatar wherein we are using that avatar for providing the training to our staff members now. How a difficult situation, our staff members, they behave and react on the situation now. So there is an avatar who talks a very different language, very tough scenario he poses, and we monitor that how that staff interacts. There is a half-an-hour session is there, and in all our learning centers, that half-an-hour session is mandatory for each and every staff member to go through that. And there is an AI. Through that, we monitor their body language, their etiquette, everything gets monitored, and after half an hour, a summary of the report of this entire conversation, it gives you the report. And there he provides that what sort of improvements that particular employee has to go through that. And that we are capturing it in our HRMS tool. That is going to help our bank to develop the customized training tool for that particular employee, instead of going for a random some sort of training and calling the people for that particular skill set now. So this we have started using it for the last 1 year. I think this sort of activities which we require to have on a regular basis in the entire banking environment. Second very, very important aspect when we talk about the HR is how much transparency we are bringing in the system now. How confident and comfortable my entire human resources, the team is there now. Another very important piece, and especially for the public sector bank setup, what sort of ambience we are providing in the branches and the ATMs. I think those are the things which is required to have if we are talking about the Viksit Bharat 2047. I think these are the basic things which we need to take care, and definitely then we can scale it up. People will love to work in that present those environment, and unless and until my employees are comfortable, if they enjoy working, I think whatever target we set, it becomes meaningless then, yeah. So first of all, we reach to set up a wonderful opportunity, wonderful environment where people should love to go to the bank and love to participate. And in turn, I think if the employees are satisfied, they will take care of the customers. See, in the institution, who are the stakeholders? Staff members, customers, and investors. So if the institution takes care of the employee and employee takes care of the customers, I think the customers and employee put together, they will bring the value for the investors. So everybody will gain out of that now. So I think that is the system we need to build up in the entire ecosystem now.
I think very well put. Happy employee, happy customer, hopefully happy investor as well. Mr. Kumar, I would love to get your views as well, particularly from a challenger bank context. It is even more important in your context to be cutting edge all the time.
Absolutely, Piyush. It's easy said than done.
Yeah.
Let's be honest in admitting the fact is the fact, right? I wish to reach the moon, I wish to scale Everest without oxygen pack at me. But the reality is that you will be, half of you will not be able to come back. So what has not changed, what has not changed? we need to understand when you come to the question of the culture of banking has not changed what it was. The style of underwriting, the way I just assess the credit requirement, the way I would do the KYC, it has become a little more stringent today. Nothing has changed. But what has changed is the culture of delivering the banking service has changed.
Good.
Right? The culture of delivering the banking service is quite adaptable with the technology in the front end. The customer first. Am I preparing my people to adapt to that culture is a big challenge. So the culture of changing the banking is not changed, but the tools which are going to be enable them to do it faster has changed. Yesterday, the pen and pencil and your sheet of paper has been replaced with Excel sheets. Now you have a tool which is going to analyze your balance sheet. You don't have to waste your time there. You have to train your people for taking a decision based on the outcome rather than directing the people to work on the outcome itself. The decision is going to be the ultimate outcome. The data required for taking the decisions today, the people are spending time. If I'm able to make my entire workforce or the relevant workforce to focus towards how do I leverage the tools around to make a better decisions. The decisions ultimately he's going to change. So that has to be made known to them very clearly. You are going to be the fulcrum of the entire decision. These are the tools and paraphernalia of what you see is going to come and aid you and support you. Learn them, take a decision, continue to be, we stand by you. That's the biggest cultural change one has to bring it. And it is a transition, evolves. You know pretty well the banking industry, whoever has watched for the last 40 years, the ledgers gave way to our ALPMs, right? So at that time I recall very clearly the ALPM operator will be in the AC room, the supervisor will be outside, right? So the slowly people adapt and evolve. The biggest advantage in this banking industry, which I've seen it for the last 4 decades, is very clearly, people are much faster in adapting the situation than what we all think. The customers adapted much faster and they put the demand on. The more and more demand on the front desk, the more and more demand on the back end, and there will be a cultural shift, which is definitely see, it is a question of at the end of the day, the moment you realize the buck stops here, people normally have a tendency of upward delegation, right? Many of the branches are 2-3 decades before, if you go and see, the front end desk will always say, like a traffic cop. We had multiple traffic cops in the branch. They will be having this way, this way. Now it is not happening because the tools are enabling them to do the delivery service much faster. The question of traffic cop has become a traffic head constable, or he started writing it on his own. True. That is a big change. The technology and the tools which are available has brought the change by itself. So I'm pretty sure that adoption will be faster.
Oh, thank you, Mr. Kumar. I'm sure we can go on for at least another 60, 90 minutes, I think, with this fascinating conversation. Maybe I think we'll end with one last question, and I'll ask each panel member to sort of, provide maybe a short point of view. If I have to ask you to pick one big transformation that the banking sector will see over the next 10 years, what would that be? Very short answer, I think, given the Deputy Governor has already arrived. Mr. Rao, I'll start with you and maybe sort of go in that sequence.
It's adaptability to changing scenarios.
Adaptability?
Yeah.
I think the way we do branch banking would completely undergo a change, and that's why we started with a concept called phygital branch. I think that's the way forward.
Branch banking shift, I think, the way we do branch banking.
So I feel there will be a huge regulatory regulatory standardization. The arbitrage available between the mutual fund and that of the FD may vanish. That is the biggest thing which may come, because that's a leveler, because you need liability to drive growth. The growth is essential for Viksit Bharat, which has to come from deposits, so that leveler will take place.
Awesome. Mr. Chandra?
For me, it will be out-of-box thinking. That is going to be for the next 30 years to think of now. So those who will go for the out-of-box thinking, they will lead the entire industry.
Fantastic. I think on that note, thank you. Thank you to the panel members for a very enriching conversation. As I said, we could have gone on, but in the interest of time, we'll end it here. Thank you to the audience as well for humoring us. Thank you.
Thank you.
Sir, I request you to please be seated for a moment. Can you please be seated for a moment?
Excellent.
Thank you.
Please be seated, sir, for a moment. Sincere thank you to our distinguished CEO panel for their invaluable insights and thought leadership on building a future-ready bank for Viksit Bharat. Your contributions have sparked important discussions on shaping the future of banking in India. Ladies and gentlemen, we are now pleased to announce the release of the IBA survey and benchmarking report developed in collaboration with our knowledge partner, McKinsey & Company. This report provides invaluable insights into the latest trends, challenges, and opportunities within the banking sector. We thank McKinsey & Company for their expertise and contribution to this comprehensive study. I request the esteemed panelists to kindly unveil the report. Thank you very much, sirs. Thank you. Thank you.